I don't know if you've been keeping track of the mortgage rates, but things have been not pretty the last couple of days. In fact, mortgage rates as of today, according to Mortgage News Daily, have jumped to the average of 7.5%. So the peak was back in October when we saw rates above 8%. That was a peak that we haven't seen in decades. And now mortgage rates again are back to that 7.5% mark. Now, of course, you can shop that around. You can find cheaper rates. It will depend on a lot of things such as your credit history. Now, one thing to note is that the mortgage rates typically follow the 10-year Treasury, which has spiked in the past couple of days. Now, are they linked to the interest rates that we often hear about? Well, loosely they are. And here's what Jerome Powell had to say today about the potential to lower the interest rate.
Right now, given the strength of the labor market and progress on inflation so far, it's appropriate to allow restrictive policy further time to work and let the data and the evolving outlook guide us.
So it does appear that the interest rate could be lowered, and I say could because if the inflation rate does not come down, it appears that they will prolong lowering the interest rate. Originally, the Fed said earlier this year that they would be lowering the interest rate 3 times this year, and now that is looking less and less likely.